So we welcome you to today's session in cost accounting. Yeah, we're looking at cost accounting. So being the first lecture, all we'll try to do is to introduce you to the concept of cost accounting so that you see the general picture, you see the whole scope of the course, so that as we zero in, you will be able to appreciate the entire content of the course. Am I audible enough before we zero in? Anyone quickly confirm? Okay, Madam Maureen, you'll be confirming for us.
Okay, you are audible, sir.
Okay, thank you. Yeah, so to begin with, we have to start by understanding the meaning of the term costs. Okay. Yeah, we're looking at cost accounting, but let's begin by understanding costs. Anyone to give us a definition of cost? What is cost? Not cost accounting, but just costs. What is cost? Any idea? And all the answers are correct. Any idea what is costs? Right. So costs is basically all the total expenditure that is incurred in the production of a good or a service. Okay. The total expenditure that you incur in the quest to produce a good or a service, that is what is called the cost of that thing. Okay. So as you are trying to produce either a service or a good, there is some expenditure that you incur. That expenditure is what is called the cost. Okay. What is costing? So costing is basically a settlement of costs. We have known what cost is. Then the ascertainment of costs, or the process of ascertaining, like knowing exactly what the costs are, that is called costing. So when you're costing, in short, you're trying to, when you're costing, actually you are trying to ascertain the costs. Yeah, that's all what you're trying to do. You're trying to ascertain the costs. Then when you ascertain the cost, then you should be fine and you should be good to go. Okay. Any question? Do I have any question? So when we say ascertainment, so ascertainment of costs is what is called the costing. Okay. Now that we have known what costing is, then having the background in financial accounting, we know what accounting means. Okay. Accounting just deals with summarizing, okay, summarizing, interpreting, and reporting the financial data. That is accounting. Okay. When you're summarizing, and after summarizing, you interpret. As you interpret, then you report. Okay, it deals with reporting of the data. That is called accounting. So therefore, cost accounting should be easy to define this time around. Okay. Is there any question from anybody? Have we lost anyone? Or are we audible enough? Okay. Now that we have known what costing is, yeah, we have known what costing is, we have known what cost is, we need to look at the general scope of your course. So in the whole course of accounting, what you'll be dealing with, you'll be trying to ascertain the costs. After ascertaining the costs, you have to report those costs that you have ascertained to management. Therefore, most of the times, cost accounting is used interchangeably with the management accounting. Management accounting. Okay, so what you find is that there is a very close link. There is a very close link between cost accounting and management accounting. So therefore, most of the times people use these two terms as the same. But what you should understand is that there is some difference that is there, just a very minor difference between cost accounting and management accounting. Okay, cost accounting, I said, it's about ascertaining the costs and reporting those costs to management. Then management accounting on its own is about analyzing those costs that have come, that have been reported by the cost accountants, and implement them or factor them in as you are trying to make decisions. I'll repeat. The cost accountants will ascertain the costs, and after ascertaining all the costs, they will report the costs. They will report, they will make a report and write to the management, reporting the management. When they report to the management accountants will look at those costs and then use the data or use the costs, use the report that they have received. They will use the report that they have received. After using the report that they have received from the cost accounting, they will factor it in decision making. I will repeat. I'm saying that most of the times, the word cost accounting and management accounting, they are used interchangeably. But for you, you need to understand that it is not certainly correct to use these two words interchangeably because they are different from each other. There is some minor difference. Cost accounting, we've said, is about ascertaining the costs. After ascertaining those costs, you have identified the costs. Then you report the costs. You summarize the costs, then you report the costs to the management. Then when the costs reach to the management, the costs will find, your report will find what we call the management accountants. The management accountants will use the information that you have given them to make decisions. Okay, so the management part, the management accountants make decisions based on the information they have received from the cost accountants. Okay, so most of the times, what you have to understand is that management accounting is coming from cost accounting. You can't have management accounting without cost. So management accounting is just all about using the cost accounting, the information you've gotten from cost accounting. Then the other key thing to learn and notice, what you will learn is that when you're talking about costs, you should understand that we are talking about two things here. The cost can be actual cost or notional. Yes, notional costs. Okay. Actual costs implies the real costs, the exact cost that involves the movement of finances out of pocket or out of the account. You can easily trace them. They are traceable, you can follow them. They are called the actual costs. But they are what we call notional costs. With the notional costs, these are not really actual costs. You can't see them, and they don't involve the movement of finances out of your pocket or out of the account. Yeah, they are just there because you believe they are there. They are notional costs. For example, the notional cost includes the opportunity costs. Okay. Last year in first year, we did microeconomics. In microeconomics, we expounded the concept of opportunity cost. The next best alternative that you forgo is also a cost. Usually these are what we call the implicit costs. So with these costs, you are factoring in the sacrifices. So, you know, when you are factoring in the sacrifices or all those costs that do not involve the movement of cash or the movement of funds out of your account or out of the pocket, then you are considering the notional costs. An example is given. You are maybe, let's say, how can you simplify this? Okay, let's say you are maybe selling by the roadside, you are selling something, those people that sell, the marketeers, and then that's near the road, highway road. So what is happening is that as you are selling those, whatever you're selling, the car may come there and just bash you because it's near the road. There is some risk that is involved. Okay, so when you're trying to factor in the time that is spent plus the risk that is involved in doing all that transaction, you're factoring in what we call the notional costs. So when you talk about cost accounting, we are basically talking about all the costs factored in, both the actual costs and the notional costs. Do I have any question? Is there any question? Do we have any question? Okay, are we clear? Madam Bupe, are we fine?
Yes, we are okay.
Okay, thank you very much. Then we can proceed. Okay. All right. So now, in cost accounting, in the whole course, what you will be doing, I said you'll be ascertaining the costs. After ascertaining the costs, you'll be reporting the costs to the management. Then there'll be part of management accounting where you will learn how to use now that information or how to make decisions based on the information you have received from the cost accountants. So the following are the common topics, the topics that you're going to cover. So you learn how to ascertain the cost of raw materials, okay? The cost of raw materials, those are serious topics that you do. The cost of raw materials, how do they cost? How do you ascertain the cost of raw materials? This is where you learn those common concepts that you have been hearing, such as LIFO, that is last in, last out, that deals with inventories and raw materials. FIFO, that is first in, first out. What is FIFO? First in, first out. That simply means, for example, when you order things, okay? When you order things, those things that came first in the business, they should be the first ones to go out of the business. I'm sure you're observing this when you go to the ShopRite, in case to the shops, including ShopRite. Let me give you this clue that many people do not pay attention. Where you're going to buy, for example, bread. What you should understand is that that bread will be stacked there in a shop. Then down there, down, that's where you find the new bread. Then on top, they usually put the old one so that the old one, which came first, can go out instead of going bad. That concept is what is called first in, first out. What came in first should be the first one to go out. Okay? So when you go to shops, buying these things that can easily get damaged. Most of the times, even the way how you stack them, you make sure that those new ones, they should go down, at least they still have time. Then those that are old ones, make sure you bring them on top so that the people who are coming to buy should buy them. Okay. So for your own information, when you go to buy, if you want new bread, go and choose that one which is down. It is the new one, actually. That's how they stack the things. That is called first in, first out. Then there are other methods that we use in costing. That's called last in, last out, LIFO. LIFO. That's last in, last out. Oh, last in, first out. Sorry, last in, first out. What came first? What came last? It should be the first one to go out, actually. So, but you use these methods to different goods and commodities, really. Yeah, for life, we'll use them for these goods that can easily go bad, and we'll talk about these things in detail very soon when we zero in. Then after raw material costing, you learn about labor costing. Remember, you are a business, okay? You are a business, you are using people. In short, you employed labor. As you employ labor, what you'll understand is that this labor is costly. You have to spend as a business for this labor. So what you'll be doing in cost accounting is to consider, how do you cost labor? Okay, how do you ascertain the costs that are involved for labor? That would include things like, how do we remunerate? How do we remunerate? Like, how do you determine the salaries? How do you determine the rates at which you have to pay those people? Like the basis upon which you have to remunerate the workers. Okay, are you paying them per hour? And you know the cost of paying per hour, and what type of goods or what type of production really should be involving, or should involve the payment of labor for hour or by hour per hour. Then should you be paying them monthly, or should it be a fixed salary? Should it be variable? Should it be on commission basis? All those things. There are key things that you consider and characteristics of different jobs that you have to study. Then you can know that, okay, I think this one is best charged. I think you use the hourly rate. Okay, like per hour, we charge like this. For example, in lecturing, and what happens is that you are paid per hour. Okay, like you look at how many hours, the rates are the hour. That's the best way of really costing for that labor, or ascertaining the cost that pertains to that specific labor. So you learn how to ascertain labor. You learn how to treat for example, overtime. Okay, there are some people that work. Really, the knocking off time is maybe 16 hours. Then there are those times when people go beyond, they knock up at 18, all those extra hours. But the overtime has to be paid for. Then you have to determine, okay, how much do you have to pay for the overtime? And there are those times when people work during the holiday, the public holidays, or yeah. So you have to determine, okay, at what rate are we going to pay the people who have worked during the holiday? When it comes to the bonuses, what type of bonuses do we need to give them? Meanwhile, our goal is to maximize profit. So we will have to consider all those things in the labor costing. Very interesting. Once we have known how to cost for labor, we have known how to cost for raw material, it is very important, and it will be important for us to consider overhead costing. This one is actually one of the most serious. Overhead costing. Yeah, overhead costing, you will look at all the costs that involve, I would say, that involve maybe production, like the production costs. Okay. Let's talk about you're running a giant, let's say, okay, let's say Unza, it were a private institution. Let's imagine it were a private institution. And as you are imagining, then you find that there are a lot of costs that Unza incur. So you have those costs that relate to management. Those are not directly related to or directly linked to production. Maybe we would say the costs that are directly linked to production are maybe the salaries for lecturers and all those people that are really involved. But there are some costs that are involved that the management incurs, like in the entire management process, there is a cost that you incur. Imagine they were paying rentals. Imagine Unza was paying rentals. There are many schools within Unza. For example, you have the School of Humanities there, you have the School of Education, you have the School of Natural Sciences, you have the School of Veterinary Medicine, the School of Engineering, School of Law. There are many schools. So now let's imagine the cost just comes, okay? The cost for rentals comes. Let's say maybe they are paying a 50,000 per month, okay, as rentals, okay. So what we'll be interested in knowing under overhead costing is, okay, these rentals, how can we apportion them to various schools within Unza? Because it will just come as one amount. Okay, knowing that these separate schools, they work almost more like independently. They are able to generate their income. They are able to pay for their own costs. So the question is, how do we divide the costs? How do we apportion the costs? Which school should pay maybe more? Okay, more in terms of rentals as compared to the other. You have to share the costs. So you will understand that there will be some basis that you will use. Maybe you look at how much space is covered by each school, okay, in terms of the land, like how much land is covered by each school. Then you say, okay, the school that covers the largest land space will have to be paying more. You do all those apportionment and those fractions. So in overhead costing, we will understand that sometimes we use machines when we are producing, okay? We use machines. As we use those different machines, there are some machines that can be used by different departments. One machine, like this department is using the same, also that other department is using the same. So now when the cost comes, how do we ascertain the cost that, okay, this department is incurring such a cost, or this other department is incurring such a cost? Because there are those, costs that are shared, okay? So we have to ascertain like the cost for each particular department. So those are some of the conversations we'll be holding when we do overhead costing. After doing overhead costing, we will look at process costing. Yeah, process costing. Under process costing, what are we interested in knowing is that one thing that we need to learn under process costing is that, these productions usually, they take process. Like it's a process. That is to say, it takes time, okay? Then there will be, you will learn a skill that will help you to cost for the entire process. So take, for example, you are maybe building, let me give an example. Unza has been building those hostels that after the School of Law for some years now. So now, how do you ascertain the cost? Because it has been crossing from one financial to the other financial short. There is the issue of work in progress that is continuing, and the costs that were incurred last time, and they are incurred this year. You incur new ones, or maybe you bought the few things that you bought last year. They are still continuing in the new period, just like that. So that's what you do under process costing. You do marginal costing. you do marginal costing as chapter number 7 actually. Marginal costing, yeah. So how do you do marginal costing? You'll learn that the other way that you learn how to ascertain costs is to look at the incremental costs. Those are called marginal costs, right? The additional costs that come as a result of an increase in production. Those are called marginal costs. So marginal costing is all about that, to measure those additional costs that come because we have increased the production. We will look at budgeting. We will look at budgeting in chapter number 8. We'll look at budgeting. So we'll learn how to budget, and after we have done budgeting, finally we'll look at the variances or the variances. Under the variances, what we'll be interested in is that we will want to understand the difference between the actual costs that we incur and the estimations or the budget. Okay. Let me give you this. For example, you have the actual costs, the actual figures. You make okay, let me use the example for budgeting. When you make a budget, like the way how the nation made a budget for 2023 budget, they made all those estimations. It is not really exactly that they will spend exactly that amount. Okay, maybe you say they will spend this much on this, but come 2023, they're even going maybe to spend more than that or less than that. Then when you're looking at the difference between the actual minus the estimated, or which is just the budget, the actual minus the estimated expenditure, that is called the variance analysis. We want to ascertain how much is the difference, okay, or how much is the deviation between what we forecasted or what we budgeted, we estimated, and the actual values that we have realized or that have come. So that is what we'll be looking at in budget, in variance analysis. Yeah. So it will be very interesting conversation, and that will be the last topic actually in cost accounting on its own. Then you will move to management accounting that I will comment later, but not right now. So this time around, we're just interested in cost accounting. Do I have any question? Hello, is there any question? Okay. If there is no question, in the last few minutes, let's look at chapter 1, and yeah, we'll finish before you realize it's very short actually. Why is it important to look at chapter 1 today? Is because we need to introduce you to the concepts or the definitions of the key terminologies. Yeah, because as we zero in doing cost accounting, we will be looking at we'll be using some specific terms. Okay, there'll be some specific terms that we are going to be using. So you need to know how to use some specific terms. So what we want to do is just trying to introduce you to the definitions of some key terms now that we'll be using there and then here in the course, here and there. Any question? Hello. Are we together, or I've been logged out, or people can't get?
We are together. We are
together.
Okay, thank you. Thank you so much. So let's continue now. We start defining some key terms. You should not forget the key terms, because they are the ones that we'll be using again and again when we zero in actually. It's like on the timetable, we have cost again tomorrow. Yeah. So what is the management accounting? So basically, management accounting is the application, okay? It is the application of the principles of financial management to create to protect, to preserve, and increase value so as to deliver that value to the stakeholders of profit and not for profit enterprise, both public and private. Yeah. But what we are interested in is cost accounting, not management accounting. So, about cost accounting, in cost accounting, actually, what we do is that we establish the budgets, the standard costs, the actual costs of operation. We establish the processes, the activities, the products, and we analyze the variance, profitability, or social use of funds. So that's what we do in cost accounting. So what we do is we establish the budget. So it's about budgeting, just as I introduced, about budgeting, establishing the costs, and studying the processes, the activities, analyzing the variances, the profits, and some uses of the funds. Okay. Now, so what cost accounting does is that it provides a lot of data for the management accountant to use. So the cost accounting aims at establishing the following. Number one, cost accounting aims at establishing the cost of goods produced and the services produced. That is what you're interested in as a cost accountant. You want to establish, okay, the cost of goods or the cost of services that you provide. When you're providing services, what cost do you incur? What expenditure do you incur? And I did emphasize that you should not just pay attention to the actual. That's why you learned microeconomics last time, opportunity cost. You should also factor in those invisible costs, those notional costs, really, so that you price well. Even if you are pricing, for example, you are having a business, you are providing services, or you're producing some goods, don't just focus on the actual funds that you incur as the costs, but you should also look at the opportunity costs. What is the next best alternative? What's the value of the next best alternative that you have forgone when you're factoring in all those things? Then they will help you even in pricing. In cost accounting, you are interested in establishing the cost of department or work session. Each department, like how much cost, does it incur? Okay, you are interested in knowing the revenues, interested in knowing the profitability of a product, a service, or a department. For example, total profit has come out as a business. You have total profit. Let's say you have made 100,000. Yeah, as a profit. Now the question is, there are maybe about 5 departments. Okay, 5 departments in that company. You've made that 100,000. Then we, as cost accountants, we are interested in knowing, okay, in this 100,000, how much has been contributed by which department or by each department? We want to know how much each department has contributed. Okay, for us to have 100,000, like what is the profitability of each department in terms of work? So you really go down to start valuing. You'll be taught how to calculate a noise. Would do all that. Then you'll be able to ascertain correctly. For example, I give you another example. You're running a business of poultry, right? That is chicken rearing, my broilers, for example. As you keep those chickens, so what will happen is that let's say you have the cost, the total cost of production, maybe would include the feeds, all those foods and everything. You just say, no, when I'm having 100 chicks, for example, 100 chicks. I use approximately how much in terms of the costs. I'm just involving the class here. How much do you think it can take to grow those 100 chicks? Just 100. Anyone who has an idea or has heard or let's estimate? Hello. Colleagues, are we together?
Yes, sir.
Yes. So how much can it take to grow 100 chicks?
Probably 6,000. Probably 6,000, I think.
60,000.
Yes, in the range of 5,000 to 6,500.
Okay. So we put it at 60,000. Okay, let's say it takes 60,000 to grow 100 chicks, like the costs. Okay. So what you're interested in as a cost accountant is not knowing that the total cost is 60,000. You're going to narrow down now to ask yourself, okay, what is the cost of raising one chicken, like one chick? Okay, that's now apportioning, assigning the cost to the units, like cost units. Like one chick, just one. How much does it take to grow it until you sell it? Then you will understand that, oh, one, it takes this much, that takes that much. When you have the profit, again, you apportion the profit. This profit is coming from which one? Each one is how much. So that was what you are interested in as a cost accountant, not just having treating things as a whole at macro level. No, you don't do that. Okay. You'll understand how to come up with selling prices in cost accounting. I told you that when you're selling the goods, there are key things that you consider. You consider the costs, you consider the quality of the thing that you are pricing. Of course, when you're considering the cost, you also include the opportunity costs. Okay. Yeah. And then when you do all that, then you can come up with the correct price for your good or for your services that you are offering. Yeah. So now, what you should understand is that it is very important and required of you to compare between financial accounting and cost accounting. I told you previously that management accounting and cost accounting, they are used interchangeably, right? That is what I said when we just started. Most of the times, most of books that you read, they will treat the two as the same. Okay? Management accounting and cost accounting. So when you look at management here, don't regard it now as cost. Really, that's the context. Yeah. So what is the difference between financial accounting, the one that you learned last year, and this cost accounting that you'll be doing? This is very important because such questions are usually brought, especially in multiple choice questions. You have such, so you need to pay attention now. Yeah, this is very serious. It might look that simple, but it is serious. So number one, in financial accounting, limited companies are required by the law to prepare the financial accounts. Yes, by the law, they have to produce the financial account, those financial statements, they just have to produce. That's what the law says. But on the other hand, cost accounting, there is no legal requirement to prepare management or cost accounts. It is not required by the law that you should prepare those what? Yeah. So it's not a mandate that you have to prepare. On the other hand, the law and financial reporting standards prescribe formats of publishing financial statements, whereas in cost accounting, formats are entirely at the discretion of management. Okay. When you look at financial management, financial accounting, the standards are prescribed. Yes, there are standards prescribed. For example, how you come up with how you write a balance sheet, I write what is that? Profit and loss account. You cannot say I'll use my own format. You will not do that. Okay, you will have to follow exactly what is required by the law. Okay, then in management accounting, on the other hand, there is no law. You can write in whichever way you want, as long as the management approves that. Of course, the management will prescribe. Yeah, then as long as they can understand, then you will write. Okay, then most financial accounting information is of monetary nature, but in management accounting, we incorporate both the monetary and the non-monetary measures. Okay, so financial accounts present an essentially historical picture of past operations, whereas management accounting or cost accounting gives us both the historical and the present and future planning tools. That's what cost accounting gives us. Meanwhile, the financial accounting will just give us the history, or it's a historical financial account, the one that we were doing last year. You're just reporting what happened, okay, already. But with cost accounting, you're able even to project the costs in the future. Yeah, you're able to extrapolate just like that. So it gives you the tools that you can actually use as you are planning. Okay. Are we together? Any question? Do I have any question from anyone? Anyone with a question on the difference between cost accounting and management, cost accounting and financial accounting? Is there any question? Hello. Are we together? Okay. So now, the other terms that you have to understand are the following. A cost center, you should understand what a cost center is. So a cost center is actually, can be defined as a production or service location. The production location or the service location, function, activity, or an item of equipment, especially whose costs may be accumulated and attributed to the cost unit. That is the cost center. Whereas the revenue center is the part of the organization that earns the sales revenue. That part of the organization that earns the sales revenue is called the revenue center, and the profitability center is part of the business for which both the costs and the revenues and are identified. That is the profitability center. And the investment center is the profit center with the additional responsibility for capital employed or possibly investment decision. So in addition to the profit center, you add the investment decisions. Yeah, then you form the investment, you'll have the investment center. So you'll understand that the costs are allocated most of the times, the direct costs that originate from direct materials, direct labor, from direct expenses, from the production overheads, from administration overheads, and from the general overhead. And I already talked about these. We'll talk about them in detail, like labor costing, overhead costing, material costing, among others. Those are the key things those are actually the things that we will be talking about. So a cost unit now. So a cost unit is a unit of production or a unit of an activity in relation to which cost is measured. Okay, so I'm saying that the unit of production or activity of or the unit of activity in relation to which cost is measured, that is called the cost unit. Yeah, that is called cost unit. For example, you would say a room in a hotel. Okay, that's a cost unit. In the entire university, would say maybe lecturers is a cost unit on its own. The students is a cost unit as well. Then the cost object. The cost object is any activity for which a separate measurement of costs is desired. Yeah, the object upon which you are applying separate measurement of costs, that is called a cost object. Okay, it can include the cost of a product, the cost of a service, the cost of operating a department. Yeah. So for example, let's say you are selling computers. So as you are selling computers, if you want to understand the cost of selling those computers, yeah, the cost of selling computers, then it means that your cost object will be obvious computers. Okay, those computers will be your cost object. As we wind up now, let's look at these questions down. Just 2 questions. I think we'll just do 2 questions, then we'll end the lecture. Before we end the lecture, question number 1, this one we have to participate, all of us. Yeah, all of us are participating.